you might be noticing that I keep on looking this way because I got 3 screens in front of me right now. Okay, so I got 3 screens in front of me, and I just want to make sure that I can see all of you. And again, if it's a safety concern, I totally understand if you don't have your camera on. However, if it is not, I really, really do encourage you to do this because you've already made the time to show up. So show up for yourself on the screen. Okay, so with that said, we're already 4 minutes in. As I mentioned earlier, this is still the online Zoom world. And what that means is people are still getting pings and getting ready to just log in. So I get that. With that said, though, for those of you who are here right on time, I appreciate you and I thank you for investing the time in growing your knowledge and focusing on your own financial future. So with that said, I'm just going to continue the session today. As mentioned, we're going to be spending the next hour and a half together. So there's going to be a lot of materials coming your way. And I really do hope that you take the opportunity to absorb as much as you possibly can. With that said, though, is it okay? I'm going to ask everybody by a show of hands, either on camera or leveraging the emojis that you got on Zoom. Is it okay that I put on my professional investor hat on today with you? By a show of hands. Is that okay with you? Okay. Awesome. Thank you. Why do I ask that? Well, here is a main reason why. Again, you can see Asian background. My parents really wanted me to become one of these people on the list, especially a lawyer, a tax or an accountant, or a tax advisor of sorts. Basically anything that's got fancy letters at the end of their names. However, that is not what I chose to do. I did go to school and got a bachelor in business. And at the same time, though, I realized that that degree really was not serving me at all in life in terms of financially and allowing me to really achieve what I want to achieve. Chasing my passion projects, spending time the way I want to spend time, having the financial options to really do what I want to do. And so what I've really learned is something that's way, way, way better, which is to become an investor. And so if you don't already have pen and paper with you right now, I would highly, highly encourage that you grab pen and paper for yourself. Because if you've ever been to any of my trainings, by the way, I have been training financial education and real estate investing globally for nearly a decade at this point. And so I'm a big fan of asking people to take down notes because repetition is the mother of all learning. It doesn't matter if this is your first time, this is your 100th time. I know that every time, even when I listen to the same talk and lecture over and over again, I will always take away different nuggets just because I may have done another deal and I grabbed another aha moment or because of something that just recently happened. And so on that note, I am definitely here as an educated investor, sharing my experiences, my knowledge, and a lot of my examples with you today. At the same time, though, everybody on this list right now, the lawyers, accountant, tax advisor, realtors, mortgage brokers, property managers, and general contractors. These are the people that are on what we call our power team. So if you've never heard that phrase, write it down. If you have, great. So from a real estate investing perspective, for now, I want you to write down real estate investing on a piece of paper, okay? I want you to pick up your pen, write it down. Or if you're fancier, you're writing on your iPad or something else, doesn't matter. I really want you to write it down so that you can look at it. So write down real estate investing on a piece of paper, okay? I'm pretty serious. So write this down and you will notice when I want you to make notes because either I'll start to repeat myself 2, 3, 4, 5 times, or I will literally ask you to write this down. And so when you're looking at the phrase now, you don't have to look at me at the moment. When you're looking at the phrase real estate investing, I want you to separate those two things. The two things being real estate is in one bucket and investing is another, okay? Real estate is one thing, investing is another. So at Treasure Talent Academy, and for me personally, I always say what I'm training you is financial education. True financial freedom, financial independence, financial confidence, and financial security come from financial education. It does not come from any sort of asset or asset classes in particular. Because once you learn how money works, you can make any asset class work for you. Okay, so under real estate, I want you to write down asset class. Under real estate, I want you to write down asset class. Okay, don't make me kick your virtual assets right now to write things down. Okay, under real estate, write down asset class. And under investing, I want you to write down equals how money works. How money works. Okay, under real estate, or if you're from Australia or the UK, just property, basically. Property investing is what they call it. Makes it simple. Okay, real estate is just the asset class, and investing is how money works. I want you to really learn to separate the two. Why? I also want you to write this down. Educated investors do not get emotional. Educated investors do not get emotional about the asset class that they've chosen. Okay, educated real estate investors are not emotional about the asset class that they have chosen. Simply because the moment you get emotional, ego gets in the way, pride gets in the way. Sometimes, unfortunately, greed gets in the way, or even fear gets in the way. And that's when you start to make decisions that are not safe, that will hurt your performance. Okay, that will hurt your performance. And so, again, since we're making notes right now, I also want you to write down educated investors. And I'm just going to let you know, I will use the words educated and professional interchangeably throughout today's session, because that is just it. Professional investors, if you dig a little deeper, not too deep, however, a little deeper, you will find that most of them have taken trainings, have hired coaches and mentors to support their growth. And that's why I will use those two words interchangeably today. So write this down. Educated investors are performance-based investors. Educated investors are performance-based investors. Why is that so important? Okay, I want to make sure that you're in the right mindset before we go any further. If you're coming here today wanting to learn how to do buy, rent, and pray, how to buy pre-construction, anything, this is not the right webinar for you. You can log off right now. And I'm very serious about it, because I do not want to waste your time. This is not one of those webinars, and that's not what we do. Okay, what we want to help you create is financial independence in the next 2 to 5 years. And you need to be coachable. Okay, you need to be coachable and follow instructions. One of my mentors used to say, you know what, if you're going to hire me, I'm going to be working with you, mentoring you. You're going to do what I tell you, when I tell you, and no debate. And I had to go, okay, yes, sometimes I did have to swallow my pride and ego a little bit. However, that's what had to happen for me to create the financial results that I want. And then after that, he goes, you can do whatever you want. Once you're financially secured, you can go and gamble. You can go and do pre-constructions. You can do whatever it is that you want. It's just that most people, when it comes to real estate investing, they seem to mix everything all in together. Now, I think you've made enough notes at this point. So look up on the screen and participate a little bit. By a show of hands, okay? By a show of hands. Who here is wanting to create a better financial future for themselves? Who here wants to create a better financial future for themselves? Okay, I feel like I should see all the hands going up, to be really honest. However, if not yet, that's fine. I'm going to allow you a few minutes to adjust. Maybe you're just logging in right now. And again, I appreciate you participating. At the same time, though, be as present as you possibly can. So before we start, I know it is a Saturday morning, and I know that most of us are in Ontario right now. So on that note, I want you to take the next minute. I want you to take the next minute quickly, because I know just because you're doing a webinar, life doesn't stop. Especially if you have little kids right now. They might be clawing at you for your attention. It is Saturday after all. So I'm going to give everybody just 1 minute to do what we call a little mind dump. What does that mean? You're thinking, oh my goodness, okay, I got this barbecue later today. I got this thing that I got to go to. I got to do that. I got to do this for my kids. I got to pack this. I want you to take the next minute and write everything down on a blank piece of paper and just park it after, okay? I'm gonna give everybody just 1 minute. Ready? 1 minute. Ready? 1, 2, grow. I hope you've had the opportunity to download it. So hopefully now your mind is as clear as it possibly can be, so that for the next 75 minutes, we can make it meaningful, make it productive for you. So I want to quickly walk you through what we're going to cover today. Okay, what we're going to cover today. Today, I want to be very, very clear is to really, for some of you, hit the reset button, or for some of you, hit the start button. The idea behind it is I want you to treat the next 75 minutes as an introduction into strategic real estate investing. Maybe you're already investing at this point. However, you might be feeling stuck. You might have already paid for training of some sorts. You might have already worked with a different coach. However, you don't know the TYT difference yet. So I want you to treat today as an introduction in terms of what we're going to cover, how we're different, and how you can create that momentum for yourself. And so first thing first, make sure you still got your pen and paper ready, okay? Make sure you still got your pen and paper ready. And I'm going to tell you this, I'm happy for you to take pictures of the screens. I don't have any problem with that. Everything we do is 100% transparent. And even though a lot of it is proprietary, take pictures so that if you want to take the time to come back and review it after, you are able to. However, like I said, I'm a big fan of asking you to take down notes, because when you are taking down notes, it actually gets more imprinted in your brains. And that means you get to retain more. And that's also the difference between busy versus productive, okay? When you take notes, you're actually a bit more productive in terms of retaining what you're learning. So first thing first, educated investors, we make money when we buy, okay? What do you mean? What I mean by that? Because a lot of people, they're going, hang on a second, I will only cash out when I sell though, okay? That's for amateurs. That's what the amateur investors do. It's no different than what we call buy, rent, and pray. You're gonna hear me say that quite a few times. At the same time though, okay, at the same time, if you don't know what that means, feel free to let me know. Type it in the chat box and I will explain it in a little bit, okay? And then make money when you buy and having exit strategies. I want you to write this down, okay? Your exit strategies determine how you make money and how much money you make. Your exit strategies determine how you make money and how much money you make. Way too many people focus on buying. And that's what gets them in trouble. Okay, last weekend I had the opportunity to speak at Canada's largest conference that's real estate investing related, very directly. It's called the Multifamily Conference. And some of you I had the pleasure to meet in person last week as well. And with that said, I have so many people that came up to me afterwards wanting me to look at their portfolio, do a quick review. And then I realized, oh my goodness, everybody, and that's not new to me, to be completely honest, okay? 9 out of 10 people, in my opinion, they have not done it right because the mindset was not right. Everybody's focusing on how they can get into buying properties rather than how they can make money from properties, okay? I'm going to venture a big guess right now. You're all here because you want to learn how to make more money rather than collect properties. Yes or yes? Okay. So really make sure you hear the difference. By the way, if you see me looking up here, because you guys are all here. Okay. Even though my camera is here on my screen, you're all here. And that's why sometimes I'll go over here just to see if you're putting your hands up. So with that said, okay, I want to make sure that you understand the difference, because I would rather, actually, you know what? Let me ask you this. Scenario A versus scenario B. Scenario A, a year from now, you are at another conference, or you and I meet at another conference, or you are out at a networking event of some sort. Would you rather tell people that, hey, you know what? I started my journey about a year ago, and I learned financial education, leveraging real estate investing to make money, and I am now financially independent or financially free? Or would you like to say, you know what, in the last 12 months, I managed to add 30 doors to my portfolio, but man, oh man, it's been so difficult because I scaled too fast and the property have so many problems. I didn't stabilize them properly. And I'm still, in addition to my 40, 50-hour job a week, oh my God, I thought this was going to be a cakewalk, and it's only going to be, I'm going to be making passive income, but I'm finding myself spending 20 hours, 30 hours every weekend going to my properties, having to do some work and working with my power team members and property managers. Which one would you prefer? Scenario A, put your hands up, or scenario B? Okay, it's really interesting. When I actually paint the picture, everybody's going scenario A, because I want to learn how to make money. I want to not have to worry about money using real estate. And yet, so many of us focus on buying. And this is why I said your exit strategies determine how you make money and how much money you make. And so later on, I'm going to share with you just how many strategies are available, at least in North America right now. Okay, I think I have a exclusively North American audience today, so that makes it a lot easier to share too. And the other thing is what not to do. Okay, so many times people are focused on learning what to do and they forget what not to do, or better yet, what to stop doing. For some of us, if we want to gain or lose quality weight, for example, we all know what not to do. I don't care if you're looking to gain or lose weight. The first thing that you might want to cut out is junk food, right? It doesn't matter. And we all know that. However, sometimes it's really hard to stop doing some of the things that we've been so conditioned to doing. And so I'm going to be pointing some of those things out as well. So moving forward, educated investors process. And then we're going to go into looking at some number analysis, because after all, let the numbers do the talking. Remember earlier, I already asked you to make down the note that educated investors do not get emotional about the asset class that we have chosen. And so the flip side of that is let the numbers do the talking. Let the numbers do the talking. I often ask people this because when real estate is amazing, it's a hard asset, which means we can see it, we can go into it, and we can touch it, right? So that's when we get in trouble, because the moment we can see it, and I'm going to be the first to admit that I still get super emotional. And this is why I don't like to visit my properties. I really don't. Why? Because one of my mentors told me early on. In fact, it was a question, and I'm going to share that question with you, and you can answer that too for yourself. Okay. So a lot of the times we tend to find people that invest in really iconic stocks, okay, really popular ones, really famous ones. What are the famous stocks these days? Your Amazon, your Tesla, your Facebook, your Microsoft, right? All these ones, and your Googles. And we always ask, for those of you who may have invested in Google stocks or any of the 5 that I just mentioned, did you ever call up the CFO and say, I'm going to buy a couple of stocks of yours? Can I have a meeting with you, first of all? No, most of us don't do that. However, why did we actually buy their stocks? It's because we think that it's going to be performing. Yeah. And the other thing also is, did you know that some of these grade A stocks, the the valuation of the companies, these companies can fluctuate in the millions and sometimes billions on a daily basis. And yet, how many people in the world don't care about it? As long as their stocks are continuing to perform, as long as these companies are continuing to perform. And that's also why I already asked you to write this down. Educated investors are performance-based investors, okay? And so let the numbers do the talking. So we're going to take a look at that. We're going to go into how to raise capital and leverage other people's money ethically and responsibly. And last but not least, how to start today, as I mentioned earlier, and keep the momentum going. And so I understand that some of you, I've had the pleasure to meet. You've heard a little bit about my story. However, I'm going to do a quick overview in terms of why I'm here delivering this session. As I mentioned, I've actually had the pleasure to teach financial education and real estate investing around the globe for nearly a decade now at this point. However, it wasn't always like this for me. I discovered personal and self-education about 13 years ago now, back in 2010. And as a result, it has completely changed my life for the better. And I don't want to be fluffy and all. I'm just going to say, financially speaking, it's made me a lot of money. And that's why, and that's my true passion. I really, looking back, I know I'm always the happiest when I'm able to make money and help others make money at the same time. And so I achieved financial freedom in 25 months once I started getting financially educated. And just so you know, when I first got started, I was 28 years old. Even though I was only 28, I was already making a very healthy six-figure income back in 2006 and 2007. So reason why I'm sharing this with you is because I understand everybody in this room, you came in at with different background, different ethnic background, age differences, professional skill sets, life experiences. It doesn't really matter, because I always say that financial freedom does not discriminate. It really doesn't, okay? Simply because of the fact that once you learn how money works, you're gonna make it work for you. My youngest student so far to date is 2017, declaring financial freedom and financial independence within 2 years. And my student that's got the most life experience so far, it has been 64 years old. And the results are the same, okay? So on that note, I'm still an active investor because I believe that in order for me to continue to train and mentor others, I also need to keep my tools sharpened at all time. And so that is also the mandate that we have for every single coach, trainer, and mentor here at Treasure Talent Academy. And just to give you a quick short list, and I do mean short list, of the strategies that I have learned and applied, because can we all agree that knowledge is no longer power in 2023? Can we all agree on that? Can you give me a nod or give me a yes or give me a thumbs up somehow? Okay, awesome. So that's the thing, applied knowledge. Applied knowledge is where it's at. And by it, I mean where the money's at. And so many of us, we take classes, we do webinars, we do seminars, we do courses, and yet the execution part is sometimes, and not sometimes, what most of the times stops us from achieving the financial results that we want to achieve. And this is why we have coaches and mentors to support us on that journey. And that was the same for me as well. In fact, I've had likely, I really should count that. 1, 2, 3, 4, 5, 6 different mentors now, just in real estate investing alone, not counting personal development. And so that's why I so believe in personal development and professional development rather than traditional education. Don't get me wrong, it was fun while it lasted. However, it never gave me the life or the financial results that I was looking for. So I know some of you can relate to that, okay? Because you may have a few degrees as well, and yet you constantly feel like you're financially stressed and you're not feeling like you're getting ahead in life. Or some of you might even be thinking about, oh my goodness, how am I going to retire at this point? Okay. And so with that said, just FYI, if you actually noticed a little bit of my accent, English is not my first language. Okay. It is not my first language. However, I do my best. At the same time, really the lesson that I've learned and that I want to share is that it doesn't matter what your language ability is like. I didn't really start speaking English until grade 12 because that's when I moved to Canada. And so again, some of you might go, you have barely any accent. And I always say, give me a few drinks and we'll talk because it's going to slip out. The point here, though, is that through my journey as an immigrant, oh, thank you. It's like, I mean, your little kid is really eager to learn this, and I love it. I honestly do. Like, you got to start financial education early in life. I always wish that my parents knew this and taught me this. However, it's okay because we are the captains of our own ships now, right? We're all grown-ups. We can make different decisions. And so what I really mean by sharing, what I really mean to share by being an immigrant is the fact that I learned how to speak English better and faster by putting myself into a full immersion space. Because when I first moved to Canada, I went into a town where there were very little to really virtually nobody that would speak my mother tongue. And so I was forced to get fully immersed. And this is why at Trust Your Talent, we believe that when you want to learn how to truly leverage real estate as an effective asset class for you to build income and wealth, it's at least a 1 or 2 year process. Okay. Do I have any immigrants in the room, by the way, by a show of hands? Just give me a wave. Okay. So I think you can probably understand what I'm saying here. And even if you're not, that's fine. Think of the last time you were learning something and you got really good at it. For most people, that's our current JOBs, right? Our current just over brokes. I'm just kidding. Our current jobs, something that you've been at it for at least 1 or 2 years before you can go, oh, I can do that in my sleep now. However, remember, the first day you show up to that job, you were probably a little nervous because you were still learning. Okay, so everybody's got the same, if not similar experience about what full immersion actually means. And so on that note, though, I want to share with you why I'm here, because I lost all of my savings. I lost all of my savings in a deal before I got financially educated, because I lived through global financial crisis. Who here, actually curious, by a show of hands, who here lived through financial crisis back in 07, 08, and 09? Okay, if you haven't, it kind of tells me how old you are right now, and that's okay. Again, financial education does not discriminate. However, for me, I was working 40 hours a week in the beginning, and it went up to 80 hours a week. So I don't know if any of you can relate to that. I was pulling very long, hard hours. And so when 2007 happened, every time I got a statement, I did everything. My parents told me to do, the society told me to do, the bank TV ads told me to do, okay? Every paycheck I was paying into TFSAs, RSPs, and company stock options. And I even put money away and paid down my mortgage faster. And when 2007 happened, every time I got a statement of any sort of investment that I was doing, the numbers would shrink. And it doesn't take a rocket scientist to figure out the fact that that is completely not sustainable. And I am never going to be able to free myself or retire on that comfortably or securely. And so I started looking for other options. And I always thought real estate is amazing, right? Well, not really, because anybody's read the book, Rich Dad Poor Dad, by the way, by a show of hands. Give me a wave. Awesome. So if you follow Robert Kiyosaki or read that book in particular, he will give an example. People oftentimes ask him, hey, Robert, it seems like you love real estate. Do you think real estate really is a good investment? And he will go, well, it depends. Are you educated enough to make real estate a good investment for you? And then, as we all know, he also likes trading stocks and trading options. And then people will go, hey, Robert, what about stocks? Do you think stocks are a good investment option? And then he'll go, I don't know. Are you educated enough in stocks to make it a good investment for you? So I think you guys are getting the point here, is that I was very much like, well, real estate seems pretty safe, pretty good. Anyways, I cashed everything out and put it into a commercial syndication, meaning I kind of joined a giant project where they get hundreds of different investors involved. They were just pooling money, and I put it in there. And then before I knew it, the developer had taken everybody's money and ran. And so it was one of the hardest things that I've had to face. I mean, forget about the money. It was my ego that took the biggest hit, because while I'm an immigrant, I never thought myself to be somebody that's not smart. And I was always willing to work hard, always willing to do my due diligence. However, the biggest lesson there is also I didn't know what I didn't know. And so I put all my money into real estate. And then I went to this meeting that the law firm called together, because now a lot of people are coming together and trying to get their money back. It only makes sense. When I showed up to that meeting that day, it was completely life-changing. Not at first. At first, it was numbingly painful. Okay. At first, it was numbingly painful. I walked into that boardroom. Very quickly, I realized I was probably one of the youngest, if not the youngest person in that room. Because what I saw completely changed my life. Everybody else in that room, they were in their 60s or 70s, or maybe even 80s. They had walkers, they had canes, and some of them were not walking or sitting. Some of them were literally lying on the floor, howling, crying. They were saying things like, this was my entire life's work. How am I going to be able to put food on the table? How am I going to continue to live? And so when that happened, like I honestly, I didn't know what I was going to do. I walked away from that meeting super numbed, and I felt the pain. Although at this point, it wasn't my pain anymore, it was theirs. And then I realized, oh my God, if I don't do something about this, it could happen to me 20, 30 years from now too. Keep in mind, at this point, I was only 28 years old. And so I just realized that I didn't know what I didn't know, and I needed to do something to protect my hard-earned money moving forward. Because at this point, honestly, I was already pretty disenchanted by the whole idea of TFSAs and RSPs and savings. I mean, come on, the last couple of years, especially the last 12 months, what was inflation rate clocking in at for North Americans? Anywhere between 7 to 9%. And yet, if you parked your money in a savings account, how much were they paying you? 1%, 2% at the very best. It doesn't, once again, take a rocket scientist to know that that's not going to work out well for us either. And so this is also why I'm so passionate about financial education and also teaching people how to leverage real estate investing properly, because of that one particular incident that completely changed the trajectory of my financial future. And so if I have not sufficiently bummed you out yet, I'm gonna do that. So here's the thing. I mean, I came from an average or lower middle class family. In my story, if you're hoping to hear that I came from nothing and from the hoods, that's not my story. However, that's the thing. We all have different motivations, and I want to share with you mine. And for me, it's also health, because I've had three minor heart attacks, and I also live with 6 autoimmune disorders on a daily basis. And so what that really means is that I realized that working 80 hours a week was completely not sustainable either. And so I had to look for other options so that I literally would not kill myself from the stress of my job, like what it does to most people. And so last but not least, at this stage in my career and in my life, I simply really just want to create a positive impact. So a lot of you guys understand that this is truly what Treasure Talent Academy stands for. This is the organization that I've had the honor to create and work with a lot of amazing coaches and mentors and trainers on the team so that we can continue to push the mission forward. So officially, the mission is creating financial independence one person at a time. Unofficially, my version of it is in the next 2 to 5 years, when you embark on financial education, you never have to worry about money again. Is that good for everybody? By a show of hands. Okay, that's really as simple as I can put it. Okay, so moving forward, I want to get serious now with everybody. Okay, business and investing fundamentals. I want to walk you through the top priorities. In fact, there are 6 of them. So take out your camera, take a picture once I'm done, or make notes as I'm going through them. Okay, you got to focus on priorities. Way too many people focus on buying properties. Again, you already know that that is not good and that's not sustainable. And it's definitely not going to get you to the financial results that you want anytime soon. One of my mentors asked me this early on. Do you want to be young and rich? Or do you want to be old and rich? Okay. Again, it's young and old, in my opinion, these days, it's all relative now at this point, because we know if you follow the footsteps of those who have done it before you, financial independence can happen for you in the next 2 to 5 years. No problem. No problem. We've got proven track records already over the last almost 10 years in my career. So when you later on have the opportunity to speak to your strategy coach, you can learn more about that. However, coming back here now, first thing first, we want to focus on positive cash flowing properties. Okay, we want to focus on positive cash flowing properties. It's not a myth, it's not a dream, it's not a feel good thing to say even. It's a thing that you got to focus on. Why? I want you to think about it this way. We are going to treat, as educated real estate investors, we are going to treat every piece of property that we acquire like a viable business. What contributes or constitutes as a viable business? A business that is profitable at the end of every month. Can we all agree on that? Yes or yes? Okay, I can see nods and hands up. Good. I really need you to hear this and hear this closely, okay? Because this is where most people go wrong. They seem to think that, oh, it's real estate. It has nothing to do with businesses. It's an asset class in itself. And so even if it's negative cash flowing, I know I'm going to have a big payday 20, 30 years from now. No, because that is why you don't get to sleep well at night when you have a negative cash flowing property, despite the fact that you might be doubling or tripling the value of that property. Okay. Our lives and wealth, I want you to write this down. Wealth is measured by time. Wealth is measured by time. Okay. Some of you might retire with $2 million, even $5 million in your portfolio, in your bank account. However, what if your monthly expenses is $5,000, $10,000, $20,000? How long can your money last you? So this is a very important concept as well. And this is why we focus on cash flow, because cash flow is what pays your bill on a daily basis, on a monthly basis, so that you don't have to stress about having to go and hold a job if you don't like it. If you like it, that's okay. And at this point, I also want to share with everybody the fact that Trust Your Talent, we're not one of those education academy that says you have to quit your job, you have to fire your bosses, okay? We're all about creating multiple income sources, because I truly believe that financial security, true financial freedom, is created by having multiple income sources. And that's also why we happen to love real estate so much, because if every single property is cash flowing, meaning it's a viable business, that means you can easily add income sources as you acquire properties the right way. Okay. And so statistically speaking, apparently the average millionaire has 7 or more streams of income. So if that's a standard that you want to set for yourself, well, let's, after this session, when you're talking to your strategy coach, focus on how you can acquire 7 properties that are positive cash flowing that will feed into your financial goals. Okay. Now, the next one is what we call return on investment. What I want you to make a note on is, how hard is my money working for me? Okay. That's the simple English version. Again, the ESL in me likes to speak in plain English. Return on investment is a big word. It's a professional jargon. However, I like to say, how hard is my money working for me? I remember working 80 hours a week, sleeping with 2 Blackberries under my pillows. I was working way harder than my money because my portfolio was shrinking. So how hard is my money working for me is extremely, extremely important, because then that allows you to analyze and assess different deals that come your way for you to jump on, okay? And so next is financing/equity. Now, I'm not going to go over the rest of the other four, meaning state of repairs and costs, terms and conditions, and appreciation. When you speak to a strategy coach, they will guide you to different YouTube videos that I have already created so that you can learn further about these. I want you to really circle, underline, and triple star the first two priorities, which is positive cash flow and return on investment. Let those two things guide your decision-making process, okay? And the reason why I call it priorities is because it literally goes down the list the way it's labeled. Appreciation for educated investors is considered what we call fool's gold. We don't count on it, okay? It's the icing on top. It's the icing on the cake, it's the cherry on top. If it happens naturally, great. If not, we're not relying on it because we're already making money when we buy. We're not making money when we sell. So whether or not the appreciation is there naturally doesn't faze us at all. Who here enjoys the idea of having 100% control of how we make money by a show of hands? That's exactly what this is, okay? And again, if everything is a priority, nothing is. And that's why we want to share this with you to make sure that the groundwork is laid down, okay? And so the next thing that I want to go into is the basic investing calculations. We talked about cash flow. Cash flow. What is cash flow? I mean, I'm just curious. Who here actually went to business school or taken like Econ 101? Simple calculations. Okay. Not all the hands went up. That's okay. Okay. In this particular case, because we are leveraging real estate investing. So one of the main revenue sources is our rent on a monthly basis. And of course, after that, we need to pay down our monthly expenses. Some of you may have heard this term as MOE, monthly operating expenses. They mean the exact same thing. And what's typically included in the expenses to run these properties are mortgage payments, your principal and interest. Sometimes it could be interest only, depending on the market that you're in and the loan that you decide to get. Property taxes, property insurance, repairs and maintenance, we always have to budget it in, regardless whether or not you've actually done some initial renovations on it, okay? We build in a lot of buffers to stress test our own deals so that we can react and respond to any situations. And more importantly, so that you can sleep at night. I know a lot of amateur investors, how they're sold is, look, the rent, the fair market rent will cover your mortgage payment. So just do that and hold it for the next 20, 30 years. That is completely irresponsible. Think about how much interest rate just went up in the last 12 months here too, okay? And also the other thing is, I wanna share with you why I feel so deeply about how uneducated investors approach things. It's the fact that they focus on buying. So I know a lot of people, they're going down to the US because they've learned that, oh my God, I can acquire properties in in certain markets and pick up a property for $30,000 to $50,000 a door. Yes, those still exist. And yes, I have those in my portfolio right now. However, what most people forget while we're on the subject of repair and maintenance is, oh my goodness, Tim, I bought this property for $50,000 only. So I thought I was getting a good deal, but then my renovation bill was also $50,000. Let's not forget that repairs and maintenance, they're always measured by current market value, okay? Your labor and materials are not any cheaper just because of how you get into the property is cheaper. Does that make sense? Yes? Okay, so please, again, it's not about how you can buy properties. Develop what we call the return on investment or the investor mindset. It's not how much it's going to cost me. It's how much it's going to make me. I'm going to ask you to write this down. It's not how much it's going to cost me. It's how much it's going to make me. Okay. That is how a true investor thinks and acts. That's how they take action on deals. If they can see that it's profitable, that's how they're going to do it. They don't care about the cost, because I will share this with you. More often than not, $100,000 property, you got to do the same amount of work to get into as a property that's $1 million or even $10 million. And I know for some of you, if you're brand new to this, you might be thinking that I'm crazy, and that's totally okay, because I remember thinking that when one of my trainers was saying this. I'm going to park that with you for now. And again, when you're speaking to your strategy coach later on, you will find out how this works. And management fee, because after all, if you want financial independence or financial freedom, you don't want to buy yourself another job. And so what that means is a big chunk of learning how to create the financial options for ourselves is learning how to what we call manage the managers. Manage the managers. Instead of you getting calls on weekends and evenings and 2 a.m. in the morning about a leaky roof, a leaky toilet, a broken window, or a creaky floor from your tenants, it is much, much nicer when you can get those things filter through your property managers, and then you might be getting that update while you are on the beach somewhere else in the world. Okay. And so with that said, a very high level calculation will get you the cash flow that you're looking for. I know some of you might be a bit more advanced now. You're saying this list is too thin, and I will agree with you. Once again, I just want to quickly go over some of the basics so that we can build a foundation. Okay, that's the challenge sometimes with a webinar like this. I got to go pretty fast and just build that foundation so we can keep going. Because I always say this, at Trust Your Talent, we don't believe that financial education is a one size fits all. Okay, it's not a one size fits all approach. Your journey is going to be different from somebody else's. So for example, Diane, your plan later on is going to be different from Mitchell's. Okay. And Sean, yours is going to be different from Catherine's. And Mitzi, yours is going to be different from Teresa's. That's just the way it works. And so this is why we focus so much on one-on-one time between you and a coach, and then later on between you and a mentor. Because while the theory portion is similar, because you need to build that foundation, your choices, the choices that you're going to be making as an investor are going to be massively different from person to person. Okay, it has everything to do with your current resources or access to resources. And by resources, I don't just mean money. It means time, energy. Money is one of them, okay? And your current skill set. Maybe from your job, you have complementary skill sets, or maybe you're like me, I was a marketing major. Real estate investing was, in my opinion, nothing close to what I was learning in school, okay? And also I say, if you give me a hammer these days, still, it is more of a weapon than a tool. I don't get to fix anything. I don't do any renos myself. The heaviest thing that I lift during any sort of renovation process is this thing right here. It's my cell phone, okay? And so that's the skill that we are looking to develop and help you grow. And so with that said, I've mentioned this a few times already. Our mission is to help you create the financial independence that you want and get you out of the rat race in the next 2 to 5 years. Okay, there's going to be times where we're going to be challenging your mindset or some of your views about money and even real estate. More often than not, it's about how you see real estate. However, can we just also make a pact for the next little bit? As long as you're engaged with Trust Your Talent, can you also do what my mentor asked me to do? Do what we tell you to do, when we tell you to do, and no debate. Can you give me a thumbs up? Okay, even just for the next little bit. And if this is not for you, it's too hard down the road, that's fine. You can opt out. Nobody's going to force you to do what you don't want to do. However, we want to show you the path that we all went on. Okay, success leaves clues. And so what that means is the next portion, very, very important. So write this down, draw it out on a piece of paper for yourself, or take a picture. Every single real estate investing strategy will feed into a different, what I call income buckets. So these are earned income. Next to earn, you can also write down active. And so what that means is earned income and active income is made when we trade hours for dollars, when we trade our hours for dollars. What that means is kind of like most people's JOBs. You don't show up, you don't make money. You show up, you get a paycheck. Okay, so there are real estate investing strategies that will feed into that bucket as well. And then we go into the passive income bucket. We're going to go over the strategies that will, and you're going to explore more with your strategy coach later on. And last but not least, we call it portfolio income. And next to portfolio income, I also want you to write down equity income. Equity income. So portfolio and equity, same thing in this case. Now, everybody's situation is a little different, okay? As I mentioned earlier, it's not one size fits all. Your strategy coach is going to help you do a financial health check when you first get on that call to make sure that you create a well-rounded circle. And that's also why I actually like to call it the wheel of wealth, because so many people, they have incomplete wheels. And this is why they feel financially, it's always bumpy. Just when you feel like you can breathe a little bit, boom, you hit a pothole, you hit a life situation, and then you have a setback or you pop a tire. And so this is why so many people, we run tirelessly and yet exhausted, okay, wanting to make sure that financially we're doing okay. And so how do we approach this? So after you've actually worked with your strategy coach to determine the strategies, and we're going to go into that today as well. Okay, I'm going to introduce you on how to get that started so that you can carry the conversation forward, keep the momentum going. And so how we feed into these buckets is by this approach. So what we mean by that is you got to first of all understand what you're looking for, what you're chasing after. Way too many people embark on this journey without clarity. Without clarity, you're going to lose momentum. Without clarity, you're going to lose motivation. Without clarity, I mean, anybody here play darts or any sort of sports? Like, how can you hit a target when you cannot see the target? How do you hit a target that you don't see? Okay, I know it's really funny, and I'm hoping that there's some aha moments happening right now. Okay, it's not buying one property at a time. It really isn't. It's about having that clear end money goal, that vision, and then we help you reverse engineer that process. Okay, and so what that means is, if your goal is to create financial independence for yourself so that you feel like life can be a little bit better, what that means is you don't have to rely on somebody else to give you a paycheck anymore. Okay, so what that means is, if you remember, or if you drew it down for yourself from the wheel of wealth, what that means is you have implemented and executed on real estate investing strategies now that will feed into your earned and passive income buckets. And as a result, the incomes that you are learning are greater than your basic expenses. Definitions matter because it gives you clarity. Okay, if you need 1,000 a month, 5,000 a month, 8,000 a month, 10,000 a month, be very clear about that goal and what strategies that you need to use initially to help you get there, so that you have the options to walk away from your job if you hate it, to do whatever else that you would like to do. Okay, and so financial freedom, on the other hand, is 100% relying on your passive income, and your passive income needs to exceed your basic expenses at this point. So your basic expenses are nothing like traveling, taking your kids to Disney World, having an anniversary trip. Okay, basic expenses simply mean that you are able to gain your time back. You don't have to you no longer have to go to your 40 hours, or in my case, 80 hours a week job, just so that you can collect paychecks to pay your bills. This will free up the time and your energy to do and pursue what you want to do. Okay, and I hope that what you want to do, a part of that includes making more money, because that's exactly what I want you to do. Okay, and so again, coming back here, as I mentioned earlier, it doesn't really matter in terms of how you do it, as long as you're clear about it when you're having this conversation with your strategy coach. So on your piece of paper right now, I want you to write down, okay, what it is that you are after. Is it financial independence or financial freedom? Like I said, treat today as a start for most of you, or a reset. I don't care if you've got 0 income properties or rental properties under your belt, or you've got 100, 200 doors at this point. The exercise is the same. Okay, 13 years later on this journey, I'm a big fan of going back to basics because people forget about the basics and they get emotionally carried away. Because you know what? I also like the sound of, hey, you know what? I actually got to build a $62 million building in Langley, BC 3 years ago. Who doesn't like the sound of that? It sounds great, it sounds flashy, and it pumps my ego. But I remember for a fact that it was a lot of work. It was the financial result that I was looking for at the end of all of that. Okay. And so coming back here, when you are talking to your strategy coach, make sure you clarify what you are after if you want to achieve financial freedom. Because within financial freedom, we also have different levels and different definitions for you. Financial freedom number 1, number 2, and number 3. They're vastly different. Okay. And so I want to quickly share with you the strategies, okay, that are available to investors. Now we break them down between hard strategies and soft strategies. Hard strategies and soft strategies. So under hard strategies, you see some of these, and this is not the entire list, by the way. This is not the entire list. However, these are some of the must learns, must know, so that it doesn't matter if the market is going up, down, or sideways, you're able to make money. I live in Edmonton, Alberta. I'm just in Waterloo right now. And so I live in Edmonton, Alberta. What that means is I've seen sideways markets and dropping markets when Ontario, you guys have seen up markets for a few years in a row. And now you're seeing it dropping down for the very first time. And all of a sudden, everybody's going, this market is so hard. Okay. It doesn't matter. Professional investors, we take calculated risks so that we can capitalize and make money from volatility. There's a difference there. When you're financially educated, volatility is also a good friend of yours. Okay. You just need to have different strategies. And we like to say that the strategies are kind of like tools. So do you want professional tools and more of those to put into your toolkit so that you can be more effective? That's 1,000% yes. Okay. So hard strategies are fun because these are the strategies that you will learn once you're an enrolled student, step by step on how to execute it. However, there are also what we call soft strategies. They're equally, if not more important. These are the business fundamentals. For example, the accounting side of things, the corporate structure side of things, the asset and income protection side of things. So many people are questioning, oh my God, how do I create the best tax shelter for myself? Well, first of all, make money first. So many people focus on how to protect the income that they haven't made yet. Okay. At the same time, though, once you're learning, we will make sure that you understand it's not how much you make, it's how much you get to keep that truly matters. Okay. And then for most of us, I don't care what kind of background you came from. You can be born with a silver spoon in your mouth and you may have multi-millions of dollars of inheritance waiting for you from your parents. In real estate, if you're looking to scale up, there will come a time where you're going to hit a ceiling. And that's why you got to learn how to raise funds. So in case I haven't mentioned this yet, Trust Your Talent Academy, we actually have the largest real estate training curriculum in North America, if not in the world. There are 16 different courses, and each course is 12 to 24 hours in length on a deep dive. Okay, so this is not a weekend thing. That's why in the beginning, I share with you, it's full immersion. 1 to 2 years is what we do. And last but not least, portfolio management, as well as staging and design, so that you can become the best investor that you can be. And so once again, you've written down your number. Maybe you've just written down financial independence or financial freedom. I want to share with you how we approach that. Once you've got the clarity, maybe you still have to work with a strategy coach first to gain clarity. However, I want to share the process that we have with you once you have a very clear money target that you want to hit. And so that process for us is what we call the S&P approach. So write this down. If for nothing else, if this is the only thing that you're taking away from today's webinar, okay, The SMP approach is how we do it. And what that means is once you've got your clarity on financial target, we help you identify the strategies that will feed into it. Once you've determined the strategies that you want to implement and execute, then let the strategies dictate the markets that you want to go into. Okay, meaning once you've gone into a market, that means you've already done the due diligence, which, by the way, in our real estate investing fundamentals course, we walk you through thoroughly on how to do proper market due diligence. So once you've chosen a market or multiple markets to contribute to your strategies, you know you're going to be making money once you execute it. And once you've determined the market, then you start looking for properties. Okay, so write this down. SMP, strategy, market, property. Strategy, market, property. If you're looking at this, then you'll know amateurs, they PMS. They don't SMP, they PMS because they look at properties first. They go to open houses. They subscribe to realtors' mailing lists. They get emotionally involved. And no disrespect to realtor, especially if I have anybody in the room, okay? We're all out here making a living, creating a better financial security and blanket for ourselves. However, you got to remember, how do realtors make money? They make money by selling and buying properties for their clients. So when you, as an investor, show up at a property in an open house, guess what? It is their job. And I respect anybody who does their job really well. It's simply their job to sell you that property. However, this is why I keep saying, let the numbers do the talking. Don't get emotional, okay? Because then a lot of the times what these amateurs will hear is, I know the property, is in an area that's up and coming, that's still going through gentrification, but there's so much potential here. You're going to get decent tenants. They will say whatever it is that they need to say in order for that property to move. Again, it's their job. Please don't fault them for it. I don't, okay? However, it is your job to get yourselves financially educated so that you can analyze the opportunity that come your way. And then the only strategy, let's say if they buy that property, is what we call buy, rent, and pray. So remember earlier I said I was going to explain it. I'm explaining it now. What is buy, rent, and pray? When they PMS, why? Because the only strategy that they have at this point is praying, number one, that they always get good tenants for the next 20, 30 years that always pay rent on time. It doesn't always work that way, okay? Have we ever made a late payment on anything in our lives? I'm not perfect. I have, okay? A lot less as an adult for sure. However, we've all gone through that. And number two, they also pray that the asset itself, the property itself, does not create a lot of problems for them. So it doesn't cost them money, too much money to fix up, to repair during the next 20, 30 years. I will share this with you. I always say this, properties are like people, okay? Properties are like people. What do I mean by that? The older we get, the more expenses it takes to maintain us. So I don't know if you can relate to this yet. If you're in your 20s, maybe not. However, I'm in my 40s now. So I feel this on a daily basis, okay? Properties age like people. The older we get, the costlier it is to maintain us, okay? Before we didn't have to go to massages. We didn't have to go to yoga. Before we didn't have to do acupuncture. Before we didn't have to go to chiropractors. These days, all these things are coming up. Oh, by the way, maybe we should start taking some supplements. So it's the same concept. And then last but not least, they pray that the tenants not only pay rent on time for the next 20, 30 years, they also pray that they don't damage the properties. We all know that it's not the perfect world. I don't like perfect world scenarios. This is not about rainbows and butterflies, okay? At TYT, we keep it very straightforward with you. And we're very honest and upfront about what you're up against, especially choosing real estate as an asset class. However, that's why when we're running numbers, you learn how to stress test your own deals based on your own risk tolerance level. Everybody's different, okay? I will say this, I'm gonna venture a guess. My level of risk tolerance is probably a lot higher than everybody else in this room at the moment, okay? And that's through a lot of trial and errors. That's through a lot of learning also. And so with that said, it's about putting professional tools in your toolbox so that you can be effective. And how are we effective? Well, first thing first, I want to share a very fundamental strategy with you, and it's what we call distressed properties. Okay, so distressed properties, simply put, it's properties that need work. Okay, properties that need work. You can see my ESL coming out right there. Okay, I'm gonna have to update the slide. So it's properties that need work. And also really just to see if you guys are paying attention, really. So this is very simple. If you've ever watched any sort of HGTV shows, you understand, okay? At the same time though, again, yes, offense, please do not take their number calculations to heart, because it hurts me that so many people think that that's how you run numbers. It's not, okay? So moving forward, so many times people are like, oh, okay, but you know, I'm really scared to touch those properties. That's fine, because distressed properties can also be coming from distressed sellers, distressed owners, people that are going through financial distress. Okay. And I want to be very clear right now. And this is something that I learned early on that really, really struck a chord with me, is that professional and educated real estate investors, we have the right tools to solve other people's real estate problems. And that's how we make money. So we're not taking advantage of people, we are taking advantage of the situations. Because distressed sellers, they don't have to sell if they don't want to. You're not going to force them to do anything anyway. Okay, so I want to make that very clear, because from a mindset and more importantly, from a value and ethics perspective, I really need you to get on board with that. Okay, we are able to approach financially distressed sellers and help them solve the problems leveraging real estate. And so what does distressed properties look like? Okay, well, here we go. Most people like to buy something that's new and pretty like that. However, this is what we're going to be looking for. We like to say ugly houses, smelly houses, boarded up houses, lawns out of whack houses. Those are the look and the smell of money. And so when we start with distressed properties, I mean, the easiest thing to look at it is we get to make money in the buy, because these are properties that are neglected by the current owner. And so that we understand, if we get to add some value, we actually get to make our own forced appreciation, as opposed to natural appreciation, as I mentioned earlier. We don't care for natural appreciation, okay? And then after that, depending on the exit strategy that you've identified, we're gonna chat quickly about a process that we call BRRRR. However, if you do decide to sell it, that's something different altogether. So if you decide to hold it, obviously, we get to, through this process, improve the cash flow and easier to find deals. Because who here remembers hearing people lining up outside of pre-construction sales centers overnight and over a weekend? So many of us, especially if you're in the Toronto GTA or the Vancouver markets, okay? By the way, I'm just gonna get everybody's permission. I understand if you've only put about 90 minutes aside, I wanna make sure I round out everything with you. Is it okay if I go about 15 minutes after schedule time today? Give me a quick yes. Okay, so I will end Eastern time at, I believe it will be 12:45 instead of 12:30, okay? So continuing on, thank you for letting me know, is the fact that when you leverage this fundamental strategy, you get to identify your own exit strategies. And remember, okay, your exit strategies determine how you make money and how much money you make. So 100% control over how you execute it. And so why distressed properties is a fundamental strategy? Well, here are some of the exits that you can exercise, that you can use. So fix and flip, flipping properties for a lump sum profit. I'm going to do a pop quiz right now. In the chat box, can you type in, if you do a flip strategy, which income bucket are you feeding into? Which income bucket are you feeding into? Is it earned? Is it earned? Or is it passive? Or is it portfolio? Earned, active, absolutely. And I'm gonna twist that up a little bit, okay? Before you actually sign on a dotted line and the buyers actually take it away from you, it sits in your portfolio income until the transaction is fully completed. Okay, this is how detailed and how diligent educated investors think and feed into our own income buckets at all times. Why? What if the market turns on you? What if the market turns on you? By the time you want to sell it, you no longer can sell it for a profit and you're forced to keep it. This is when you need to identify other exit strategies. And this is why we always say that most of us need to learn at least 3 different, if not more, hard strategies so that we can react to market fluctuations. Remember, up, down, and sideways markets. Okay, and so we're gonna go into the BRRRR process. Not everybody needs to do the BRRRR process. I have investors that don't care to BRRRR it, and I'll walk you through if you've never heard of that phrase before. Or you can lease option it out, or depending on the type of property in the beginning. In Ontario, a few years back, one strategy, I don't call it a strategy, it's literally just a process, turning a single family home into a legalized duplex, meaning instead of one door generating income, the same property, one title is now generating 2 sources of income. Okay, so it could be a small multifamily or it could be a somewhat larger multifamily. Or you can also do private lendings on these properties, or you can wholesale it out. Okay, no matter what your exit strategy is, distressed property is the fundamental approach that you do. And so fix and flip. The point that I want to focus on before we get into numbers is that it works in any market. Okay, in today's market, especially in the Canadian markets, please don't say there are no deals. Okay, there are deals. You just got to look a little harder. And this is the funny thing, something that another mentor of mine said really, really early on that really hit me and that resonated with me is this. And this is not ego or anything. And, you know, he did preface that as well. The difference between me and most of you right now is that you can drop me off in any markets right now in North America, or for that matter, worldwide, is that within 72 hours, I am able to create a profitable real estate investing deal. That is the difference, because we've learned how to find deal, how to analyze them, and how to structure them, and how to execute on them. That's the main difference. And so there are opportunities once you learn actually how to find them at all times. So with that said, I'm going to go into running some numbers with everybody. So fix and flip. This is actually an example from one of our trainers and mentors, Jeffrey. And so quick calculations for everybody if you want to grab your camera and take a picture of this. Okay? Grab your camera and take a picture of this or do a screenshot. After all of this, what you are looking for is that lump sum profit at the end. So continuing on now, here is an example of Jeffrey's fix and flip. This, as you can see, is what it looked like before. So nothing too highly distressed, just looks really outdated. Okay, so a lot of times if we're just doing simple renovations, we really look for just what we call cosmetic renos. So what cosmetic renos, very, very different from, you've probably heard people say gutting it down to the studs. Okay, this particular example is a very simple one because if you look at the before and after, fresh coat of paint, refaced the cabinetry, updated the counter, updated the appliances and kitchen fixtures and light fixtures and door handles. Okay, and the flooring. Before, once again, and after. And this is why, as a real estate investing training academy, we have a course called Staging and Design, because it's not about teaching you to become a designer or a stager. It's about training you to see it through the investor's eyes because we have statistics after statistics from our trainer for that course, who also trains lease options and portfolio management, to prove the amount of increase in profit, in NOI, decrease in selling time frame. All that is additional profit that you put back in your pocket as your bottom line. And so with that said, one more pictures, and then we're going to go into numbers. There we go. You can see very, very simple in this particular case. So here are the numbers. Okay. This is an Ontario example. $720,000 purchase price, closing cost $14,000 because you have land transfer tax. I'm from Alberta, so I'm very not used to paying land transfer tax. However, just so you know, personally in Ontario, I don't hold title on anything. I will do private lending into this province. Same thing with BC. Why? Because of your residential tenancy rules. However, everybody is different. Like I said, your risk factors and your risk tolerance is different from mine. So when you have that conversation with a strategy coach, start that conversation too. Your mentor will eventually help you out and sort out exactly what your SMP will look like. Okay. And so closing costs, renovations, and holding costs. So we know that there are a lot of investors out there, when they're showing these numbers, they don't even count holding costs and holding costs and closing costs. That's very, very dangerous. Okay, that's very, very dangerous. So please, 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 even though this is an introductory webinar, I want you to make sure that when you get to develop the basic sensitivity towards how some of the other people run numbers out there, so that you protect yourselves. Okay. So at the end, sold price is $860. So that sold price, based on the picture that you took, is what we call the after repair value. Is the after repair value. Your ARV should be as close to your sold price as possible. Okay. When Jeffrey listed this property, guess what? Was he listing it at $860? Probably not. Depending on the market condition and the selling strategy, he could be listing it at 800 and accepting bids, or he can be listing it at 900 and allowing offers to come in and negotiate that way. Okay. So that is another layer that you will learn when you go to real estate investing fundamentals at TYT here. So total cost, we have to pay ourselves back first. And then at the end of the day, we still have to pay commissions and legal expenses at every turn. Okay. So initially, closing costs also includes your legal too. Remember, when you're buying, you're not paying realtor commissions. When you're selling, you got to factor that in. So quick profit of $46,000. It's not life-changing for most people. I get that. However, I still want to ask you this. What would an additional $46,000 do for your life? Even if you just do one of these per year and do it well and do it right, would that start to make a small positive difference in your financial situation? Okay, at Trust Your Talent, I'm a big fan. I mean, we can talk about the multi-million-dollar development deals, you know, that's totally fine. However, at TYT, we are big fans of making sure we lay down the groundwork at the foundation so that your life is easier first, and then we can play. Okay. And so with that said, here are the full numbers. Here are the full numbers. Why are we running that number? Simply because of the fact that the next thing you want to calculate, remember, cash flow is also profit. In this case, because it's a flip, so we're looking at profit. So $46,000 is our profit, but what is our ROI? What is the return on investment? You can already see it on the slide. It is 35.11%. Okay, total in, total out. Total in, total out. Total out is $46,000. Total amount invested in total is $131,000. So the return on investment in this case, when Jeffrey sells the property and exits the deal, is 31.11%. Okay. It's a 3-month deal when you control the process really well. Some people will let it drag out into 6 months, 8 months, 10 months because they're amateurs. They don't have a system, they don't have a team, they don't have a mentor guiding them. And that's the difference. If you are able to build a system with your mentor and you can duplicate this process 4 times a year, your annual return is 140%. And what's 4 times 46,000? It's a good number. Let's put it that way. It's a good number for most of us, okay? Now, I want to walk you through a different thought process using the same example. And this is a process that we call BRRRR. BRRRR is not a strategy, okay? By the way, I have not shared how I determine if the person that I'm talking to is an amateur or educated investor. And here is tip number 1. When they call BRRRR a strategy, you can tell that they are an amateur investor. BRRRR is not a strategy, it's a process. Because of real estate investing, I've also been able to invest into different asset classes and businesses. And one of them is a restaurant or food and beverage, if you will. And same thing, we did the BRRRR process on the restaurant, our first restaurant there. Okay, so that means you buy, you renovate, and next to renovate, if you're making notes, I want you to write down the words add value, okay? And then rent, refinance, and repeat. So it's a process that you can apply, not just on real estate, because after we acquired the restaurant, we renovated the physical space, we updated the furniture, we also updated our software, our point of sale systems, we also renovated our menu items and updated our pricing. That is all value add. And from a rent perspective, that simply just means that we get to command a higher charge. Same thing. And then we get to refinance, take the equity out, and repeat that process. Okay. So please, now that you've been to this seminar, you know, when you go out there and people say, yeah, I know the BRRRR strategy, I do the BRRRR strategy, you can tell that they're not financially educated. They may have gotten trained on a process. However, it is not sustainable in the long term, because I've also known people that have used the BRRRR strategy and done 12 deals. And because they BRRRR everything, every single property is only cash flowing 50 to 100 bucks after all is said and done. Even though they're sitting on some equity, they're still financially distressed. Okay, so it's about how you can leverage the process wisely and intelligently to really feed into your financial bottom line. So on that note, again, 4 ways to make money in a BRRRR process. Very, very simple. Remember, buy under fair market value. So this is why we keep on saying, make money when you buy, not when you sell. Make money when you buy. And then after that, you value add for forced appreciation. And then how you improve the NOI and cash flow is through controlling your expenses. And that will in turn actually dictate how much renovation you want to do upfront. Okay, some of the things, let's say, that Kevin would do, Mitchell probably wouldn't do. Then in this case, it would show up differently on their spreadsheet, and it would affect their cash flow and their return on investment as a result. Okay, last but not least, refinance and take out the equity, and that is tax-free money. So when you start to go through business fundamentals at TYT, you will understand how we actually create the ultimate tax shelter for you, as long as you understand how money works. And so now that we've gone through the process quickly, I want to share this with you. Okay, so let's just say here is another deal. The thought process is very, very similar. And this property is out on the east coast of Canada. Purchase price was $235,000. It was already appraised at $270,000. So first mortgage that he got is $188,000. And as a result, down payment and closing cost plus renovation, the initial investment adds up to about $125,000. We always round up our expenses, including initial investment, just so you know. And then fair market value, we know it's $350,000. Refinance at 80%, paying out the mortgage balance. That means we actually take out $95,000. However, we did have to come up with $125,000 in cash, which means we're only leaving $30,000 in the deal after the BRRRR process is done. Okay, so let's take one step further. Assuming we rent this property out, it's actually a two-door property. Two-door, meaning there are two streams of income coming in, two units, two different tenants, okay, two different leases under one roof. And so after all expenses and mortgage is paid, there is a cash flow of $720 on a monthly basis. So what that means is cash on cash return is 28.8%. So by a show of hands, who here would do this deal? I know most of you will put your hands up at the same time. I know your question is also, where can I find this deal? Okay, so this is where real estate investing fundamentals is going to teach you how to do market due diligence. And then let's sum up the deal. $35,000 money in the buy, because if you look on the left-hand side, once again, the first two numbers, appraised value at purchase is 270. However, Jeffrey picked it up for 235. Can we assume that there's some sort of distressed and motivated seller situation here? Yes or yes? Absolutely. And then 28.8% cash on cash, number pretty strong, 20% of or $7,000 in equity after all is said and done. Okay, cash flow of $720 a month, pretty solid deal. Okay, so the green part, if you have not taken a screenshot or picture yet, now is your chance. I'll give you 3 seconds. 1, 2, and 3. Okay, so the whole idea of showing you the green part is this. I know BRRRR is actually a new marketing term that people came up with, I think 4 or 5 years ago. When I first learned it, I'm old school. We call it money in, money out, asset for free, and income for life. However, these days, because of market conditions, we usually say asset for almost free, because we did have to leave $30,000 in the deal. But that is still better than having to buy something for $500,000 these days and trap the 100 grand in, right? What that means is if you have a bit more resources, you can scale your portfolio a lot faster. And so for those of you who want to go down to the US, we also have a US curriculum at Trust Your Talent. This whole process is very simple. Our American friends just call this cash out refinance. Cash out refinance. So they all mean the same thing, okay? You BRRRR it, you want to say cash out refinance, you want to say money in, money out, asset for almost free, and income for life. They all mean the exact same thing. So hopefully that demystifies a few things for you also. And now I want to share with you, okay, at the end of all of this is what is the cost of inaction? Is this. Okay, Jeffrey's fix and flip. Let's just using the same example, $46,000 per deal. Let's just say that you started getting educated last year. And so this year you do a deal. You make an additional 46,000, or maybe you decide that, hey, you know what? First one was a learning experience. I didn't exactly get it done in 3 months, but I did it done in less than 6. So I'm going to do it again. That's adding an additional $92,000 to your bottom line. And even if you have to raise funds and access other people's money, let's say you share the profit. We always like to say it's about sharing the wealth. Because of my personal story, which I share that with everyone, I believe that once you're trained and educated, it is so easy. It's so easy to raise money. Why? We say money will follow good deals. Money will follow good deals. And it's our duty to share good deals with other people so that they understand that you can help them and help their money work harder than it already is right now. And the other true question, though, is money will follow good deals. Are you a good deal for people to park their money with? That is the ultimate question. And so get yourselves educated. That's what we strongly believe. As big of a bias as that may sound to you, doesn't matter. It is at every turn the way it works. Okay. People will have naturally more confidence in parking their money with you when they know that you are taking real estate investing and financial education very seriously. You have a long-term plan, you have goals, you have systems and process and coaches and mentors in place to help you execute. And so with that said, assuming next year, you said, I've got a system and system built up now. I've learned a few things from the first 2 deals. I'm not going to be greedy because I still got a full-time job. I still got kids. I'm just going to double the deal count. That's an additional $184,000 in your bottom line. And so there are no right or wrong ways to do this. It just depends on how you want to do this. Okay. And so next I want to go into what we call a strategy session. A strategy session. And this was actually prepared by our strategy coach, Nina. And so at the end of the day, it is not one size fits all. You got to figure out what it is that you want to get out of your own financial journey. Because again, your goal might be different from somebody else's. Teresa, Ken, even if you're from the same city, even if you're the same age, even if you come from the same cultural background, even if you make the same amount of money from your current jobs, you might still have different aspirations and financial goals, okay? And so again, I just want to walk you through this so that you can start thinking about it. And when you engage in a conversation with a strategy coach, it's a lot more meaningful and you can get things moving, okay? It's about creating multiple sources of income. Now, the big question is when? Because I know many of us, we are very busy every single day, and that's okay. That's why we say 2 to 5 years. Everybody is on a different path. If you are taking longer because your current commitment load is a lot higher, that's okay. You're never going to look back 5 years from now, 2 years from now, 3 years from now and go, well, that was not worth it for me to achieve financial freedom or financial independence. Okay, that's the thing. And so I want to share this with you. I take a picture of this entire chart. Take a picture of this entire chart. And if I'm going to give you any homework, this would be it. This would be what you would stare at and make sense of, or some sense of, before you do the next step. Okay. So here is the next step. I would like for you guys to go through a 3-call process with a strategy coach on the team. There's no obligation for you. Don't feel pressured. If you feel pressure right now, that's fine. However, do yourself a favor. We don't charge for these calls because at Trust Your Talent, we only accept 60 to 80 students on an annual basis. This may or may not be the right path for you. However, do yourself a favor. You've already gone this far, okay? Make the time and make an appointment with a strategy coach. And when you do speak to them, you have 3 things you want to focus on. Number 1, ask them for a copy of this presentation so that you can review it. I've already asked you to make notes and asked you to take screenshots. However, I'm happy to provide a copy of this presentation so that you can come back and review it. Number 2, ask them to help you complete your strategy plan based on the slide that I just asked you to take a screenshot of. And how are you able to make these appointments? Here it is. I'm going to drop it in the chat box, okay? And I want you to copy and paste that right now. I'm going to give you 1 minute to do this. 1 minute to do this. If you're already in TYT, you know you don't have to take this step right now. You already have a mentor supporting you, so that's okay. However, for those of you who are brand new, do yourself a favor, okay? Be fully committed, at least for the next week or 2, and go through the 3-call process. The strategy coaches will be very straight up with you. This may or may not be the path for you. So do your appointment. all you got to do is go in right now and pick a time so that you schedule your first call and you guys can figure out where to go from there. Okay. So Nagesh, done. Amit, Mitchell, yeah. Diane, Shrikant. Is that how you say your name? Yeah. Rocky, Sean, Audrey, I know you're already in chats right now. Teresa, Prafula, Mitzi, Catherine, Ken. Okay. Make sure you do your appointments. Once you're done making your appointments, give me a thumbs up, please, so I can move on. Yeah, still waiting for a couple more hands. Still waiting for a couple more hands. Rocky Patel, Sean, Prafula, Mitzi. Maybe I didn't see it when you did have your hands up. Okay. Yeah, in the process of scheduling, strat calls with Nina are eye openers, worth the time, guys. Oh, thanks, Audrey. Yes, Nina's amazing. Every single strategy coach is amazing. Yes, I will put that up again. It is. So in the interest of time, I'm going to move forward. However, Diane, here it is for you. Again, in the chat box, you can leave it open and do it right after, okay? Do it right after. Sean, what's the question? Oh, are you just telling me that you got it done already? Oh, that's fine too. Okay, so moving forward, I just want to share some upcoming events, okay? We have an online live bootcamp and a live workshop in Toronto. So it depends on your learning style and where you are, you can look into those as well. However, your strategy coach will guide you and help you choose whether or not you need to come to one of those and which one you should be attending. And then we also have a coffee chat 2 Saturdays from now. Next Saturday, we also have a free webinar, which you will find on our Eventbrite page too. So for those of you who are not on our Eventbrite page or not following us yet, you will not find another financial education or real estate investing training academy that does as many events as we do. Remember, full immersion. You don't learn a new language in over a weekend. You don't learn a new language over 30 days or 90 days. Okay. So we want to make sure that we'll continue to support you in every way possible. However, if you're in the KWC, Kitchener-Waterloo and Cambridge area, we are doing a TYT Connect tonight. So that's usually a networking event where we bring together real estate investors, new experienced business owners, different entrepreneurs. We come together and we mingle, we network, we get to know each other, and we get to deepen the existing relationships that we have. And so we constantly do these across the country. A couple of days ago, we just did one in Ottawa. Okay, so all these events are posted on our Eventbrite link. So on our Eventbrite page, all you gotta look for is when you go onto Eventbrite, if you've never done that, this is the website. It's called eventbrite.com. And then search for Trust Your Talent Academy. Okay. I know every time I share that link, people tend to come back and be like, wow, you guys do a lot. Yes, we do. Like I said, we're very specific about what we are putting out there into the world and what we want to create. It's all result based. Now, some of you might be wondering, okay, what's next? Still, what's next is this, okay? This is what you're gonna do next. So I think all of you have already scheduled your first appointment. Let the process unfold, trust the process. May or may not be for you, don't worry, okay? Just do yourself a favor. Anything that we can do to help, we know we're here for the long haul. Trust Your Talent has been around for 3.5 years already. We launched right before COVID lockdowns, and we've created dozens of people that have declared financial independence and financial freedom already, even during COVID. And so that's something that you will learn as you go through the process. And once you're part of the community, you will get to meet these people as well. And so on that note, I just want to say thank you so very much for joining me today. And as a last little thank you, I want to share our YouTube channel with you. Our YouTube channel has a lot of the videos that I've created. It's called My Daily Dose with Tim. And these days, if you actually add me on Facebook under the Tim Tsai, okay, Facebook under the Tim Tsai, that's my handle. You're going to also see season 3 of My Daily Dose with Tim. So start watching those. I've got a lot of very positive feedback, and you'll know that none of those are scripted. At the same time, the content that I put out there is very much financial education through strategic real estate investing. So with that said, and on that note, I want to congratulate you for completing a 105-minute webinar with me today. If you have any questions, please feel free to reach out. My email is very straightforward, okay? It is tim@trustyourtalent.ca. Okay, so Janet, thank you. Had my calls with Nina. She's awesome. Thank you. Yes, like I said, every strategy coach on the team is amazing because every single strategy coach, trainer, and mentor on the Trust Your Talent training team have already declared financial independence or financial freedom. And that's why we do what we do. And that's also why we limit enrollments, because we want to make sure that you have our full attention while we continue to grow our own portfolios too. Okay, this is not a talk the talk kind of business. This is a walk the walk education platform. So look forward to seeing you guys in future webinars, seminars, courses, and Trust Your Talent events. Enjoy the rest of your Saturday and your weekend. I hope to see some of you tonight in Waterloo. And on the Eventbrite page, you'll know that it's happening at Morty's Pub tonight. So I look forward to seeing you all again down the road at some point. Okay. Happy learning and later.